All right, good morning, everybody. How's everybody doing on this fantastic Sunday morning? So, we're going to talk about Bitcoin today. A lot of it. We're going to talk a lot about Bitcoin. Let's go out to the weekly real quick. Everybody knows the trend line that I'm watching. The reason I'm watching it is because, like I've mentioned previously, we've never seen a weekly close below this trend line since the March 2020 sell off. Excuse me. So basically, I'm watching to see if we do get that. Now, the 2 week close was last weekend, so this weekend isn't going to be the 2 week close. Next weekend will be the 2 week close. So even if we do close this week's candle below there, there's an opportunity or there's a possibility that that could be a bear trap. With today's price action, I don't know if that's what's going to happen. Currently, I am bullish, but I'm only bullish up into the weekly high, which is the target at 51,995. Let's go out to the daily and check that out. So yeah, you can see that on the daily time frame, this trend line is definitely being struggled with. Yesterday we got a daily close back above key support, which would have been resistance had you closed below it. But since you closed above it, basically that's support now. And you can see that with this wick low right here on this daily time frame. We push down back into this level. All right. You got the close above there. This is a retest of it. It did go deeper than the level, but that's to be expected in intraday price action. But now you're trading back above it. And also, now that that daily candle has closed above resistance, that is now going to be the support zone at which I want to see at least 4 hour candles closing above. So here we go, 4 hour chart. You can see that we are currently above that, but there's 1 minute left on this close. So it looks like we're going to get that close, but we don't want to see a bearish engulfing. So as long as that we keep going higher, you can see that on the 4 hour time frame, you got resistance levels that you're going to come into play before you even get to that target. But as far as your daily support or your daily resistance levels, you've got the Heath level, that's 5460, and then you've got the resistance. So that candle is a doji. So your actual resistance versus where the supply is very, very close. You see that? Just like $100. So it doesn't really matter which one of those two levels you look at. If you did get bullish in this move yesterday and you are targeting that, you might want to take some profits ahead of that $50,500 level. All right, just scale out some of your position just in case we do not get a push over those a swing into those stops. Basically, what I'm expecting is for this wick high to be taken out, boom, with a wick, and then trade back lower. If we get a rejection here, then what this is going to look like to me is that price just went up to sweep those stops and maybe getting ready for another push to the downside. However, if we do get up there and close a daily, our next level to watch will be the old support here. All right, that's going to be the next. Now, I know that this did break and close below, so you can use that if you want, or this. The price is different. All right, but either way, that's where your next target would be if you do get a daily close above this resistance. Now, that doesn't mean that I expect a daily to close above here and then the next day to go hit that. That's not what I'm saying. You can get a daily close above this, and then price can trade all the way back down to here, find support, and then get an expansion back to the upside. Remember, price doesn't move in a straight line unless it's cascading like this, right? But generally, price does not move in a straight line. It moves in waves, and we have to try to position ourselves to catch those waves. Now, the reason that I have a bullish target up there is because here's 8 hour support, all right? Tested here, and you got a bounce, and then we traded right back down. Alls we did here was sweep these stops. We swept these stops right there underneath that wick with this 8 hour close. Boom. You swept the stops. Then your next 8 hour session was a bullish engulfing. All right. You took out the low, you took out the high, and then you even closed above the open of this bearish candle. So that is a bullish engulfing or an outside candle. There's your bullish follow through. Boom, boom, boom. Last 8-hour session, we just opened a new candle just now, so you can see that's a nice close above as well. I'm not paying too much attention to this trend line inside of this price action. Like, I'm not going to use that trend line to take positions, because I know that even though we're up here, we can always pull back, right? We can always pull back to demand. And here's demand. So price can pull back here. I don't want to see price do that, because then my target will probably not be hit. But I'm just saying, for now, we'll watch 8-hour support, or you can go down to 4 hours. Right there is going to be 4-hour support. You've got 4-hour demand here. So that's the level that I would more so watch for potential entries if price stalls out here, rolls over like into tomorrow and into Tuesday. If we get this area here to stall out, that's a potential good spot to look for bullish entries. And remember, that resistance level, that's that daily res. So from there to there would be pretty much my range of price looking for entries to get up into that. When you're inside of a weekly range like this, a big daily range and a big weekly range, you're trading in chop. So the trade entries are less likely to work out. Okay? They're less likely to work out. So even if price does trade back down to there, it's less likely that it's going to be a good spot to enter, just because of the fact that it's in chop. You're in chop. All price is doing right now is smoking highs and lows. And that's price discovery. All right? Price discovery just means you're sweeping highs and lows. This low here is still intact. It's still intact, and it will be intact until you get a run below that. But like yesterday's video discussed, there's your swing low. There's your sweep of the stops. This was your highest level. There's the sweep of that. All right. Then this swing low was the area. And you can see once you swept the highs up here, gathered all that liquidity, price traded straight back down and swept these lows. So you're seeing a move higher, but it's not an extremely nice bullish move. It's basically trading sideways to up, right? Multiple candles of sideways, then you get an expansion just barely, then you trade sideways, expansion, sideways, expansion. This isn't what you want to see for bullishness. This looks more like bearishness to me. I need to see a big range expansion to the upside to make me feel better about that target getting hit. The only reason I'm looking for this target to get hit is because this low was swept here. Now, price can always roll over and keep going lower. That doesn't mean that price has to go up there to sweep those stops. That's the next place, right? Because once this high was put in, that means there is the liquidity. The liquidity is setting above that swing high. All right? So I would assume that price would move up there, sweep the stops, and then come lower to take out this here. All right? Because that's what price is doing. It's taking out both sides of the market, and it's trading sideways. So, and I expect this. This is what I expected. When we put in that big range, not yesterday's video, but the week prior, I basically said, look for sideways price action for a couple weeks. We could see this for weeks. This could take 4 or 5 weeks to get out of here. So we'll see what happens. But yeah, currently I'm looking for price to push up and take out that swing. And then if it rejects, only if it rejects with a big bearish candle, my next target will be this, 46,200. All right. So these are the two targets, either for bearish or bullishness. If we stall out here, all right, if we stall out at resistance, currently here is 4-hour res. If we stall out here, and there is a wick high there, so I mean this wick high could be the target. If we stall out here and roll over, then instead of looking for this bullish target, I will probably be looking for the bearish target. It's sideways and it's choppy and it's difficult to make decent trading decisions around all this. So the best advice I could give you is wait for price to be in the extremes. Wait for price to get up here before looking for any entries, and look for price to get down here before looking for any entries. All right, that's your extremes. So But me being an intraday scalper, I will attack these ranges. So let me show you what I mean. All right. So yesterday, for instance, right, we set an hourly res right here. All right, there's your hourly resistance. So yesterday, right, there's an hourly Heath level there. There's an hourly Heath level there. Let's put it on the chart. Boom. So there's your hourly Heath level. Retested, moved lower. Price comes up, sweeps, and then closes back below the Heath level. And then instantly you get a rejection right back down. Push up, swing low. This takes out the stops. And now we're seeing this slow, methodical grind back to the upside, which leads me to believe that price is reaching for the upside liquidity. But yesterday, trading inside of these ranges, I did take a position yesterday. I took entry on this green candle right here, and I took profits on this area right there. So basically, I took a very tiny range scalp because I just assumed that if we reject there, the next hour would at least give me a test back down to the open of that bullish candle. So like, you can do that. It was a 2% win. 2%. All right. I took 2/3 of the position, or 75% of the position off. Moved my stop to break even, and I got stopped out. But it was a profitable 2% win. So you can do this inside of these hourly candles. All right. Here's a test of a Heath level there. Take entry. You're only aiming for the open of your previous hourly candles open, right? Entry, exit. And that played out exactly perfect. Same thing here. Push up into your Heath level there. Entry, exit, right? You can exit at the hourly support. Boom, boom. That's your range. That's your trading range. That is your profit objective. And you can do that 1,000,000 times in a span of a week if you want to. I don't like to do it that often, but when it's in a very choppy environment like this, I will look for smaller profit objectives. I will take entries looking specifically for a 1.5 to 2% victory, and then just shut it down and wait until I get into another high probable area. And your support resistance levels, supply and demand, are very good places to look for those entries. All right, I built the strategy around this technique because it's the best technique in the world for scalping. In the world, I don't see any other strategies better than mine. But, that's why I use it. So right now we're seeing a little bit of rejection. This is your last hourly Heath level. You did finally get an hourly close above it there. Then another hourly close. But just look how that bearish candle closes right on that old level. What's going on here? I'm slowing down. Let me see something. I've only dropped 13 frames, so I don't know what the problem is. All right. So, yeah. That level is still holding. Why is this so glitchy? Maybe if I try to shut down. It's only on that screen. That is so odd. I'm going to close down the chat for now. Take it off that other monitor. Let me close this. Let me close this. Close this. Hopefully that'll help it when it catches up. All right, but anyways, that's what I was looking for. And then, these candles are going to respect these areas. Now you got an open. All right, what's going on here? All right. So now you got a new open, a new hourly range open. You traded up, found supply, and now you're moving lower. All right. So the next breakout area is going to be this hourly candle. That's your breakout area. That's your set in resistance. You did not close above it there. You did not close above it there. You did break out and close above it here. So if price is going to experience a pullback, that's going to be the first area to watch to see if price respects that area. All right, if we go out to the 30-minute chart, pull up this. Okay, So basically in the chat I was talking about that if we can get up here and sweep that wick high here, then we could see a pullback. And if we look at the RSI, the 30-minute RSI has done a damn good job at calling these swing highs. So like if you take an entry based on that, see, there it is. Now it's working better. I need a new computer already. This computer is new. Whatever. Anyways, there it is. Nice little call up, right? You're into resistance, 30-minute RSI. I wouldn't suggest using indicators to take trade entries, but if you're using the indicator at specific levels that you know is resistance, I see no wrong with that. I see nothing wrong with taking a bearish entry there, right? Looking for this momentum oscillator to cool off a bit. So when you get like 2 or 3 hours into the position, or on this 30 minutes, so an hour or two into the position, you can close it, right? You're not looking for 100% victory on every trade. You're just taking entries and getting little tiny base hits here and there. They add up. It's the trading outside of an area like that, right? So I wouldn't be tearing to take a trade here. It is 30-minute resistance, but the hourly level, the reason it holds more weight is because it was literally a supply zone that price reacted to massively, right? So of course, if price trades back up into that area again, there is a good opportunity to take an entry looking for around a 1 to 2% victory. All right? Not looking for price to move straight up or straight down when you take entries. You're just looking for the high probable areas on the chart to take like a bunt, I guess. Is that what it's called in baseball, when you just put your bat out straight and let the ball bounce off of it? That's basically all you're trying to do, is get consistent profits out of here. Now, going back out to the longer term thing, if we do lose that trend line, I'm assuming that we're going to see a pretty big move to the downside, because it's a very important line, right? It's a very important level. You've never closed a weekly below it. So if you do get a weekly close below it, that's going to bring about bearish sentiment. People are going to be like, well, this thing's done. This is over. Let's get it selling, getting out of my positions, waiting for the next bear market low to reaccumulate. People are looking for a blow off top, but when this occurred here, this wasn't considered a blow off top. It is to me. Anytime you have one range or one or two candles that literally takes out the lows of multiple bullish candles, to me that's considered a blow off. Another word for a blow off top is exhaustion risk, right? You're up at highs and you just literally run out of buyers, and then you get boom, 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 3 big down weeks. Now, would I consider this a blow off top? You could, right? 1, 2, 3, 4, 5, 6 bullish weeks were taken out in 3. Boom, boom, boom. That's, I mean, yeah, you could look at that as a blow off top. That doesn't mean that it is the top or it will be the top. I'm just simply stating the obvious. When you take out multiple weekly bullish candles in 3 little weeks, that's pretty vicious downside. And you can see continuation from that, but not right now, not right off the rip, right? If I'm looking for shorts, I want price to get up higher to look for the potential move back down. This tested a daily wick low, and that's where people just started hammering it again. This wick low right there, that was where people started to sell again. There's your push up into it, and then boom. But you found support down here. There was support, now here's support. So getting back above resistance or getting back above this would get people more bullish. But I'm not getting bullish on Bitcoin until we get above and we're closing like dailies above that green line. That's the downtrend. If you get a daily close above it, pull in for a retest, and then you start to trade away from it, then you can look for bullish entries at swing lows, on your daily swing lows. Don't look for bullish entries at the top of a daily candle, of a bullish daily candle. Like right now, see here, this daily candle, this is the range that has been beset before us today. You're not looking to take bullish entries at the top of the bullish daily candle. You want to take your bullish entries at the low. So that's essentially what we're trying to do day in and day out in the FX markets, in the crypto markets, and the stock markets. All right, we're looking to take entries at close to the open. If our bias is bullish or bearish, you know what I mean? We're looking to take those entries, look to capitalize on a move higher. But since you're wicked low down here, there was no way to get long there, right? There's nothing to tell you to get long unless you go into a smaller time frame. And I'm not sure where that wick low is. It's not all the way over there. There's 6 4-hour candles in a daily range. So this is probably the daily low, right? That wick low. So technically, there was an area to get long on. Right there, your daily demand. There, see? That's when you're looking for your entries, for your bullish expansion to the upside. But not up here at the daily highs. If anything, you're looking for shorts. I wouldn't be looking for a short, though, because you just closed above resistance. So basically, price recaptured 49.3, 49.450, whatever it is. Let's put it, okay, so there, 49.407. That's the price point, right? That's your resistance. This close above basically indicates that price has expanded to a new range. It is moving up and out of this, so any retest back into this could be potential entry, but you're still taking an entry relatively in the upper edge of the daily candle. And you want to get those entries as low as possible, especially if you're looking for bullish entries. It doesn't always work out. I got stopped out on a trade last week in the Forex market. So it's been difficult trading in the FX market lately because everything's chopping around. Sideways chop. It makes it difficult. When things are trending, it's so easy. So easy. Because if you're getting a bullish trend, you just take entry on a retest of a demand level, right? Like this would have been pretty easy trading. In hindsight, I don't know that I would have tried to get long on that. Not with resistance right there. It's choppy, guys. Be very careful. That's all I can say on it, right? Super choppy. But there are opportunities to take. So we're going to keep an eye on it. We're going to see where Bitcoin closes today. Today's the weekly close, and we are trading very close to this trend line. And, I mean, the trend line's reacting. 4-hour candles are reacting to it, right? Closed back above, right? All these closed under. Now when you're above it, all these are closing above. Then you reclaim the downside of the trend line. Rejection, breakout. So far it's holding. Could potentially take bullish entry there if you want, but only look for that high. Make your targets smaller. Aim small, miss small, right? Aim small, miss small. Good morning, everybody. Oh, wow, you guys are active in the chat this morning. Alex missed it, poor guy. That's okay. It'll be recorded. Let's get rich quick. Let's do it. What's up, everybody? Damn, he smelled trading expertise over here and came running. Good morning, all. Hoping to catch much of the live session as the weekend life allows. That's fine. It'll be. You can catch it on the YouTube community page or on the Patreon. And if you're in the Discord, of course, it'll be up there as well. No music. I have it on. You just can't hear it, I guess. It's really low. Yeah, it's always trappish. And ranges are trappy. Alright. I haven't got back in with my spot position yet. Just looks like shit for the current period. Maybe Christmas we'll see some turnaround. Yeah, I mean, the longer term, for you longer term guys, I mean, I'm longer term too. It really does. It really does. I mean, but like when you put in a massive range like this, it just takes time for price to discover where it wants to go, right? It's got to find if there's more demand at these current areas or supply. And whichever one wins out, that's where it's going to go. This doesn't look good, right? I do not like the fact that we took out the old all-time high there with this wick and rejected. So if you just look at the overall narrative that the market is saying to us, right? There's the high. So if there's a ton of shorts there, to basically when you start stopping those shorts out, that starts triggering more demand into an asset, because stop losses on short positions are buy orders, right? So by running those stops, it automatically starts to fire off a bunch of demand instantly. Demand starts rushing into the market in the form of buy orders from stops getting purged. You couple that with FOMO breakout buyers, and then just the whole FOMO community, you should start ripping to the upside when you take out old set all-time highs. We didn't get that. Not only did we not get that, these are weekly candles. So once we took out the all-time high, 1, 2, 3 weeks before you even got back up to the old all-time high. Then you closed above it with a weekly closing basis. So yes, we're looking for this bullishness to continue. What happens? Boom. That was a bull trap. So what has occurred since the bull trap? Downside cascading. All right. So what this means is this is exhaustion risk. There was demand in the market, but supply was overwhelmingly faster. All right. Even when you start taking out buys, that brings in sell stops. Those buy orders are sell stops. So it does the same thing like what we were looking for, a bullish move higher because of, a squeeze, a short squeeze, so to say. You get a long squeeze to the downside. Once you start triggering retail stops, you get below this wick low and it's all over. There's your continuation. This is what we should have seen once this occurred. That's what we should have seen. The same as this, but up there. The same exact thing. That's not what happened. That's because these are big people are selling into that. And then now we're $15,000 off the all-time high. And people are calling this a damn pullback. That's not a pullback. A pullback is pulling back into support. All right. Here, let me show you. This is a pullback. Boom. Take out all-time high. Pull back into support. Support holds. Boom. Nice. Next week opens. You get a lower push. Tested this low. Then you get bullish continuation. This is a pullback. This is sell side. This is selling. People are selling. They did it over here too. Okay? So you can put this whole market top in a narrative. So there's the selling. 618 retracement level, bullish breakout, but that was a bull trap. Then we got short right there. Remember? Fantastic short. All the way down into the target. Boom. Right there. So basically getting short at the Heath level, capturing targets at this weekly's low. That means you basically took out the whole weekly range. What a trade. Multiple days. Massive move. Downside. Loving it. But we take profits there, mainly because the 200 exponential moving average on the daily was down there. Also, you were, there was multiple reasons why we stopped there. Then we got that bullish breakout. Then we were bullish. We were looking for price to continue higher. But once you get up into this, you are now coming into that supply. We know that supply is above 60K. We just know it. We know it. Alt H. Let's find 60K. There's 60K. All right. Look at this. Over here. There's your sell. Those are your sell orders right there, setting at $60,000. Couldn't even get a weekly close above it. Could not get a weekly close above 60K. In comes this. Big nasty. That's what that is. That's the big nasty. The liquidator shows his ugly face. We're getting short. Boom, boom. There. But I wasn't, because I was caught in the bullish opium like everybody else was. Right? That was my bad. I should have had everybody looking for shorts, especially once that swing low is taken out on the daily. That would have been a nice trade. But It is what it is. So we're getting basically the same thing here. Is it possible that we find support here and then move higher? It absolutely is. We know that we do currently are sitting at a very good spot for demand to be back into the market from that trend line. Here, 60K, you got above it a few weeks, but look at this. You're consolidating above it, essentially. Here's your expansion to the upside. What happens? As price is moving up, it's just getting beat up with sell orders, right? It doesn't happen right away, right? As price is moving up, people are selling into this move up, taking profits or starting to do new short positions. They are running. Those sell orders are coming in as the weekly candle is moving up. That's why I say it's best to look for selling on the top of bullish candles and buying at the bottom of bearish candles, because that's when your banks and everything else is manipulating price. They're pushing it. As price is moving higher, they are dumping. They're dumping. Then it just exhausts. The bottom falls out of it. And you got bullish or bearish continuation all the way back down to the P word. Almost, no, the B word podcast is down here. 30,000, 34K. So, yeah, I don't know what's here, right? We know that there's several $1 billion in this market above 40K. We know that Elon Musk spent 1.6 billion for Tesla at 32K, and then you got Michael Saylor, Giga Chad, buying at 27K, 3.6 billion, and then another 3.6 billion at 59K. And if you just cut that in half, that gives you an average cost basis of around $40,000. $40,000 is down here, right? So price can go all the way down there before you start to see some real demand. And I don't even know if you will. I don't know if there's enough, if he's got enough money in this thing to keep it propped up all by himself or not. It's highly unlikely. The whole crypto market lost $1 trillion worth of its value. So where did that money go, right? Where did it go? Why isn't it came back? I got a good question today on the Patreon messaging. He asked that very question. Where did all that money go? That's a good question. In somebody's pockets. Right? That's where it went. So right now we're going to keep an eye on that weekly close. I don't want to see it close below support today. I don't think it will. It looks like it's trying to reach up higher, so it looks like it's chasing liquidity to the upside currently. Right now, the nearest area is at wick high. So we can't really do nothing, not even here, right? Just it has to either get down back to support to look for potential entries, being here or the Heath level, or if we get above this wick and then kind of reject, you might be able to take a short swing, a swing at it short, looking for like a small range to the downside. So yeah, it's choppy. Very, very choppy. When do you produce your FX review? I used to do that every Sunday, but my internet connection got so bad there at the end, I just basically quit doing it. But I used to do it every Sunday evening. The way my schedule used to play out is I do the 2 live streams during the middle of the week, Tuesday and Thursday mornings. Then Saturday I put out a Bitcoin update. And then Sunday evening I would do the Forex Weekly Outlook. But the Sunday evening stream started to fall off because I would drop massive amounts of frames to the point to where the video would just be uploaded blurry, 480, like straight P, no high definition, and people won't watch that stuff, right? It's difficult to watch, so I just quit doing it. But we can look at some Forex pairs real quick if you want. I'm here for you guys, man. Let's go look at Euro USD. Euro USD is trading in a massive range, just like Bitcoin is here. I had a bullish target there, but then Friday happened, or not Friday, but Thursday happened. Was looking for support, didn't get it. So yeah, right now you're in it. It closed literally in the middle of this range here. Boom, boom. You did take out the downside though, right? So yeah, there's support. Looks like we held it on Friday. So coming into Monday, or today's going to open here, right? That's going to be your open today. Watch to see if during the Asian session or the London session, if you get a push down to this day's open here, right? You want to see price trade down, test this area, and then if you're watching an hourly chart, you want to see a bullish engulfing or something that shows that that's where people are buying it. Because if you look at the structure is bullish, not the long-term structure, guys. Obviously, I know this thing's in a downtrend, right? I'm not saying that. I'm talking about this little move off the bottom. Like, here's your first impulse up. You set in a high above daily res, took out those highs. Then you come in, hit support, and then you get a bear trap. You get your close below support, and then a big bullish engulfing. Not an engulfing because you didn't take out the low, but a big bullish breakout nonetheless. You did break out above resistance. Let me pull it back in closer for the people on mobile. So here, right, there's your breakout and close above res. So this was a retest of the daily Heath level. There, boom. And then you got a little deeper push to the support zone, and you closed bullish on the day. So that's why we're going to be watching either the Heath level or the support zone. We can get rid of this. If you start going lower than that and it looks like it's going in to test this candle's open, then leave it alone. Or not open, but close. Like, we've already tested that. So if price goes back down there again, then they're probably looking for this target here. All right. But as of right now, this structure looks like you have your impulse up, you have your pullback, bear trap, expulsion to the upside or expansion to the upside. So it looks like this could be your next push to the upside coming in soon. But I would look for it by Monday or Tuesday. If you trade just like as an inside day, then that's going to suck because we got a lot of that, right? Trading inside of this candle's range. But we did take out the low side of it, and now we're in the middle. So now we want to kind of look for those entries here. And yeah, you could absolutely target that up there. I won't, right? I will take 2/3 of the position off at the daily high because that's what I do. Then I'll let that final 1/3 position run up there if it wants to. Absolutely. But yeah, so that's on Euro. Euro, we're looking for a pullback down to 1.12931, and that's where we want to see it hold as support. That's where your potential entry is going to be for a bullish move back to the upside, right? Targeting this daily high or this daily high, whatever that is, right? And we'll see if that plays out Monday, Tuesday. If it don't, then like I said, you're probably coming right back down there for that. Which that would mean that the dollar's getting bullish, and that's not going to help Bitcoin either. But see, this is the thing. Right now, price is not doing what it should be doing, right? What the fundamentals say the dollar should be doing, it's not doing. So let's go look at it. I don't know if inflation is bearish for the dollar. I mean, let me rephrase that. I know inflation is bearish for the dollar, right? So I don't know. I don't know if this could be a top because of inflation. And if that's the case, then Bitcoin could get really bullish, which would be fantastic. But if this thing holds support and then heads higher, Bitcoin is going to come off even more. So dollar is bullish, and it's still structured bullish. The reason that you're falling here is because of that quarterly. You're in the quarterly resistance. Right there. Boom. So that's what you're stalling at. Weekly, look, stalling at that quarterly res. Last week closed as an inside week. It closed inside of your previous weekly's candles range. So these are going to be this week's targets. High or low, right? That's your quarterly. We're going to look for this to be taken out or this to be taken out on the dollar. Let's go look for the Euro USD one more time because I didn't see that. Because it didn't. Yeah, that's what I thought. See how the difference is on the Euro USD versus the DXY? The DXY is trading as an inside week. On the Euro USD, we took out that low, last week's low, and then look how you closed. You closed bullish. That's why I'm saying that you're going to be looking for a push down to there for potential entries. Your target, last week's high. Boom. So that's exactly what's going to occur on the DXY as well. Since it's still trading as an inside week and closed bearish, let's go to the daily. What I would be looking for, since it's inside week, I would be looking for a push back up to your daily open, 96.21. Look for a potential entry to get short. And you'll be targeting at least this low. Boom. But if that move occurs, you're probably going to come on down and take out that weekly range. Right? All these candles are trading inside of this candle, this one daily candles range. Right there. It's disgusting. It makes trading very, very difficult. But as long as you're paying attention to what I'm telling you and you participate in your trades in this manner, you're only looking to take trades at the outer edges of those candles, right? It does sound a little bit unorthodox. Why would you be looking to get long down here? Well, if it goes back up, you want to be in the position at the lowest part possible. But you can watch that on like an hourly or I'd say 2 to 4 hours. Closes, right? Closes. So if you're looking for bullish entries, which we wouldn't be, we'd be looking for bearish entries. There's a decent spot. I doubt you get a wick all the way up, back up to that. So let's go get the daily. There's your highest daily bullish close. So back into the 2-hour chart. That's that. Let's get rid of that quarterly level. It's pissing me off. So we could push up into this here, right? And if you see rejection there, then you're going to want to look for your short. Looking for price to move back down to the bottom end of the range. And that's where you're going to be taking profits. You're taking profits as retail is trying to sell into that because they think it's a short. Why are you doing that? My light bulb is flickering. Turn the music up just a little bit. Oh no, maybe that's good. I can't hear what you guys can hear. All right, let's see. Let's go look at pound real quick because pound dollar, US, Euro USD, and pound USD are my favorite assets in the world. Let's get rid of the old levels. Oh shit, I just got rid of my indicators. That's all right. I'll put them back. So, big, nice, bullish move on pound on Friday. Big, strong move. You're obviously in a massive downtrend on the pound. Massive downtrend. But you don't want to look to short down in here because it's so overextended to the downside. You can run into exhaustion risk, too. You can exhaust the sellers. When the sellers get exhausted, you get big bullish bounces. And that looks like what occurred. So, you took out a resistance. You're right into a heat level. So just from the last 3 days worth of price action, order flow looks what? Bullish, right? I'm not looking at any of this. I'm just trying to get a bead on what to look for potentially moving on for another day trade. So this candle put in a low, higher low, boom, higher high. So we will look for pullbacks, small mid-range pullbacks. To there or there. There's no daily supply zone to look for, really. I mean, it's that, but I don't know if that would be a deep enough pullback. Let's go look at 4-hour chart. Let's look at 8-hour chart first. See if we got anything in here. Not really. There's something there. Yes, I mean, maybe a pullback down into one spot, 32206. Perfect. 4-hour level there. It does look like that would be a pretty big pullback, pretty deep pullback. Yeah, so watch it to see if you get closes below this level, or if you even go down there. This thing can open up and shoot up, right? We have no clue what's going to happen. But right now we're looking like the market is looking for the higher. So basically what we want to do is we want to look for higher low support. And that would be a decent spot for higher low support. You have a 2-hour heat level there. You can use that one first, right? But Once again, 2-hour closes. You get a 2-hour close below 132298, then you're not looking to get a bullish entry. If you get a wick down there, you can take entry, make your stop tight. That doesn't mean the trade will work out, but if you want to try to get a tack of the wick or the very low tick, you can look at a 30-minute or a 15-minute. See if you start to get like a bullish reaction there. Then you can take entry and stop there and wait for a range expansion to the upside. That was a nice bullish move. But in downtrends, bullish moves get sold into also. So don't look to take bullish entries up in here. If we see that move lower, then we can potentially look for bullish entries. And USD CAD, it's just doing nothing. It's trading sideways to up. Big down days. But yeah, this thing's difficult to trade sometimes. I can't believe we missed that. We were all over it. And I still missed it. It would have been nice to get into this bullish move. Oh yes, let me say this. I'm exiting this pound yen trade. Okay? The reason is because we're back up to here. I don't like that. Right? I don't like that. I've been sitting in this thing for a long time. This trade. Been sitting in it since this. So what's another week? Well, the thing is I can put that capital use somewhere else. I already made like a 6x on that. Not the entire account. Right? I didn't 6x the account. I 6x'd the original entry, the position that I took. So, and that was after I took profits. That was after I took 2/3 of the position size off. This ended up being a 6x. So, like, I'm taking profits as soon as this thing opens. Getting out of it completely, cutting it off. Because if we do get that bullish bounce, right? Look at this support you're into down here. I mean, that's vicious, right? Multiple wick lows down there. So yeah, if you can't get below it, then there's no point in sitting in the pullback. I can put that capital use elsewhere, like, I don't know, getting long. Trying to get long and look for a place to get out of it for a potential pullback. But we'll see what happens. But I'm definitely out of the position. Alright, out of the position. And that would mean that I do not have any open Forex positions. So, yeah. That's what I'm going to do. Good morning, good mornings. Wait, let me see here. That just skipped out. I guess there's still enough sell pressure. Maybe shorts won't close until they get stopped out. Yeah. On Bitcoin, I really don't want to short it. It's not high enough. Right? It's not high enough. If we get up into there, 53 to 54, then you're coming back into an old area of support. So that would be a decent spot to look to get short as long as it's rejecting. But if you get above that downtrend line, then you're not looking for a short, right? You get above this, you're not looking to short it. Shorting is probably the wrong trade. Is it possible that you do get a close above that? Obviously, everything is possible in trading. We can't see the future. We can only take entries at high probable areas. Good morning, Tom. Good morning, my friend. Only do this in liquid asset. Yes, only do that in a liquid asset. What happens on one of my screens as well? I restart TradingView. That usually fixes it. Yeah, it's working fine now. Yeah, it's crazy. The big question, did we see an out of line move on that break below the trend line, or was it a take out a pattern to the upside? I don't know what an out of line move is, Nick. That's one technical term I don't believe I've ever heard. Little late. That's fine, Wes. You're grounded, but that's fine. Just kidding. Using your strategy to trade stocks. Would anyone benefit from using direct access broker that lets, say, Webull Trade Talk? A direct access, in my opinion, if you're gonna trade stocks, you might as well just do it the right way. I mean, yeah, you can trade with Webull. I have never used it, so I don't know what kind of entries you're gonna get. You're supposed to get good entries because they literally sell your info to bigger brokers. Their business model is that of the same as Robinhood, right? That's the same business model. They're selling your order flow. That's why it's free for you to take an entry. They're literally selling your order flow. Or not just yours, but everybody that uses the platform. I would just suggest you just get TOS, right? The TOS platform. They have really good fees now. In fact, you can execute options on that platform and only pay like 30 cents for fees. And you're going to get the best entries. Like, I take entries on trades. Like, if I'm just buying shares, I get really good fills on that platform. It's not as quick if you're going to be scalping in and out of penny stocks. Then there's better platforms for that as well. Like Wes said about Warrior Trading, like the broker he uses, that's probably the broker you want to use. But you're going to pay each time you enter and exit a position. So there's downfalls to the free, the no trade fees. There's downsides to it for sure. But I do decent, right? I do decent using TOS. TD Ameritrade. I couldn't think of the damn name, and it's on my computer. Yeah, that's it. Thinkorswim is the platform, and it's free. It's a free platform, and it comes with a ton of extra stuff. Like, a lot of people buy Benzinga Pro. Benzinga Pro is a new Squawk Box service. Basically, you turn it on, and it talks each time there's stock-related news. You know right then and there, right? You could get that for free on TOS. The same exact stuff that people pay $180 a month for from Benzinga, you get it on TOS. They pay that fee for you. They want you to trade on their platform. And it's a decent platform. I do execute options entries and regular stock entries as well. How did you determine to not remove the trailer for pound yen on the first big swing lower when it came? Because I already had taken the profits and I was looking for a risk-off move in the markets because of everything that the Fed was saying. The Fed was basically telling everybody to start looking for risk-off. I mean, the Fed, if you listen, the Fed will usually tell you what's going to happen because that's what they do, right? So I was looking for that risk-off move. I was actually trying to get in Aussie yen also, but I failed. I got stopped out twice. On both attempts to meet a short the high, I got stopped out. But I caught the pound yen trade. So once I took profits on it, I just let it go. I was expecting more downside. This was the news. This was the time when the BOE said that they wasn't going to do anything with interest rates. The market did not like that. Big, strong move to the downside. Then you had chop sideways action here. And then the Omicron variant came out. Boom. I mean, that was a fantastic trade. Absolutely fantastic trade. So yeah, on this weekly swing, I didn't exit. Nope, I just left everything situated right where it was. Price would have had to come all the way up there to stop me out. Or at that daily Heath level test. There. My stop was setting just below my entry. So price would have had to come all the way up there to stop me out. So while I was knowing that and still expecting more downside, I just stayed in it. I mean, this thing can still run lower. It can still get below all these swings. In fact, that would be a fantastic bearish target. If this thing starts to stall out, I will target 148.467 again. But it's at a spot now where people are looking to potentially buy it. And the pound dollar as well. Here. All right. New yearly lows. You're at fresh yearly lows. And guess what? It's about to be a fresh new year. Okay? So right now may be a time to start to look to position yourself bullish the pound. So let's go back here and look at the yearly chart. Let's do this. So that's last year. Last year. Big bullish move, man. Got above yearly resistance with a closing basis. Look where you are now. Boom. You're testing this candle's close. That's your yearly support. Yearly. Big stuff there. Now remember, we also had a trend line that we were watching. Yeah. All right. On log, you didn't get a close above it. Remember, I was talking about this like earlier on into the year. I can't remember exactly what months. I think it was like around the early part of the summer. I was talking about if we get above this on a quarterly closing basis, then we're going to look to get bullish, and we're going to look for a big move to the upside, at least up into almost 150 from this swing here, right? But there's bullish targets still there. So we were looking for potential bullish entries if we could get a close above that. It was during this quarter, these 2 quarters, I was watching that trend line like a hawk. And then this happened. Closed below the open of both of these candles. Then push up. I mean, it doesn't get no better than that. Look at this. Doom. There's your short entry. Why would you be looking for a short entry after this quarterly put this in? Well, because this quarterly put this move in at a massive resistance, right? Downtrend resistance. This trend line only works on log. If you take it off log, you did get a breakout above this trend line already on a quarterly basis, not a yearly basis, a quarterly basis. But on log, you have not. All right? And then trade pulls all the way back up into quarterly res, and that is the most perfect entry for the fourth quarter. The whole fourth quarter. If you sold one spot 38320, you are the baddest trader in the world, essentially. Looking for a quarterly range expansion to the downside. And you can set in these trades like that for the whole entire quarter. So this is what I'm saying now. On a yearly, look where we are here. We're into yearly support. Last year's open. Where does this thing close? Well, there's 19 days left on this yearly candle. A close above could potentially be looking for bullish entries from a retest all the way down to that. So let's go into the daily. There we are. Doom. So for a quarter range expansion back to the upside for the yearly candle, any push back down into this line is going to be met with some heavy buying. More than likely. If, let me rephrase this, if, big fat if, the fundy guys are looking for bullish pound, right? If they are, that's going to be one of the best places to look for bullish entries. And it turns out it was so far, right? So, hence me looking for potential places to get long, right? Looking for longs. This day's open on all the way down to support for a day trade. But if I can get in a position down here for like a long-term yearly grind trade, then I will, right? Then I will. But we're at a key area. This is almost like the best time of the year is at the new year. You can go back and see like where all these things were. Like, let's find January here. January 11, 6, 5, 4. All right. There. January 4. All right. Look at this. All right. So that's the weekend. Here's January 4. This is the very first. This is your yearly opening range. All right? Your yearly candle opened there. All right? Now look at this. There's your yearly open. There's your first push lower on the yearly candle. Remember, guys, price usually sets in that first move is usually the fake move because we're looking for this, right? Here's the open. We're looking for that first initial move of the candle to be a push lower. Then we're wanting the range expansion. And then there's your chop for the candle close. That's what a candle looks like on all time frames. All of them. Yearly, monthly, all of them do the same thing. So here's your first push on your yearly open. Remember, this is the yearly open. There's your push lower, and it took a week or two. Found support. Where did it find support? At an area where he tells you to look for support. There's your bullish entry on your yearly opening range. If you got long there, you essentially made money on all of that, the whole entire move up on the yearly range. And you just set in the position. There's your yearly high. There. And it was taken out. Once the yearly high was taken out, you've seen what? A monster pullback. So I know this looks choppy and stuff, but if you look at it, look at what it really is, that's where your big money is. Your big money is taking this entry and taking that exit, and then re-entering here and taking this exit. Now potentially looking to enter here and taking this exit, right? They're looking for your bigger moves. They're not day traders. They're not trying to find intraday moves. They're looking to invest $15 billion at 1.32009, and they're going to set on that $15 billion position until it gets to wherever their price objective is, and their price objective will be because of fundamental reasons, not technical analysis. They're not looking at technicals. They will look at a chart, but they're mostly thinking about fundamentals like inflation, stuff like that. So we're going to look to get positioned, right? I'm going to try to get you guys positioned in a nice trade for this year, one that you can just set in. You can do it in FX. You can do it in FX. And you can do it with a third of the position size. Because if you do it one third of position size on a position that you got a 10 pip stop, that essentially means you're in a swing trade with a 30 pip stop, right? That's basically the math. So yeah, those 1/3 position sizes, they can absolutely pay you. I caught all of this move to the upside on a day trade. I got all of that. It's a fantastic trade. And then I just caught all of that on a day trade. Fantastic trade. The strategy will pay you in dividends once it really starts to sink into your noggin and you start to see these candles of what they truly are, where to take entries and stuff. As long as you can get all the stuff that keeps a trader from being successful, as long as you can get control of that, you're over trading, you're revenge trading, I think the market's going to do this, so I'm going to get long, and then it doesn't work out, and then you get long again because you think that it's going to. Like that, all that stuff. You get control of that, and you take these entries that I'm teaching you, you're going to have a fantastic trading career. You should be able to beat the S&P 500 every single year. You're talking 8 to 12% a year. You can do that in a month. Yeah, Thinkorswim is the platform. Yeah, understood about pound yen. Thank you. You're welcome, my friend. Awesome stuff on pound dollar as well. Thank you. Awesome. Wow, $15 billion position. Yeah, that's possible in FX. That's possible. See, this is another thing that you got to understand. We're trading in FX. The reason FX is my favorite market in the entire world is because it's world reserve currencies. No, not the world reserve currency. That's the US dollar. But it's the world's currencies. So let me put this into perspective. We know this is support because we do technical analysis. But say China has $20 billion worth of the British pound. And they want to get rid of that. They want to translate that, right? They want to get rid of it, or they want to buy yen or whatever. This is where they do it. They do it in the market. They need to get a good rate on their exchange. So they'll probably do it here, right? Offload $30 billion worth of pound and then pick up, I don't know, $5 billion worth of Japanese yen or whatever. They don't have to buy Japanese yen because the pound trading versus the yen, it's going to be based off what the pound does. So, yeah, you're trading in the currencies. There's massive trades that go down in these markets. Massive trades. Countries exchanging currencies for new currencies or this or that. Like a train load of paper money. They do it inside of the Forex market, in the exchange. It's a fantastic place to trade. Beat the S&P 500 in 1 month. Yeah, you can. And then don't trade again for the other 11 months and you'll be beating the S&P 500. It's that simple. Most traders give it back. That's the problem. Most traders don't have a problem with winning. They have a problem with giving it all back. That's the part you gotta weed out. You gotta quit giving it back. You gotta take it and keep it. That's the hardest part. One key, I think, is the screen time. You will catch less big moves on day trades if you're not at the command station each day. People working day jobs might be better on swing trades. Absolutely. And you can do that on the 8-hour, daily, 3-day, and weekly time frames. Absolutely you can. If you're looking for a trend, right, there's a trend. You can potentially wait. Like, swing trading can be as easy or difficult as you want to make it. But that's with pretty much all trading. Does that work? Yeah, it works. Alright. So here, right? To keep it safe, you wait until you get above that trend line before you start looking for bullish entries. Yeah, you're going to miss from 152 to 148. You're going to miss all that. But you're not trying to make every cent of every movement. You're looking for high probable setups. Wait for price to get up into here, and then you find a larger time frame resistance or support or supply or demand zone, and then that's where you take your entry with a wide stop, looking for this new trend change to continue, right? You can absolutely do that, and you don't need to spend more than 20 minutes a day looking at the screen. I can literally know within 5 minutes if I'm going to be able to take an FX trade or not. First thing, I wake up 6 o'clock in the morning, I look at my watch list, I scan through every FX pair that there is. And I know just by looking at the open to where price is compared to the open, if I even want to trade anything. I can see it within 5 minutes and be done. So, I mean, it just, yeah, you can absolutely trade. Every single day when you get off work, you take a look at the markets, see what transpired, where you're looking for entries. Say you're trying to short this, right? For instance, you can set a limit sell order at 151.090. Put your stop loss however wide you're looking for. If this is your profit target down there, 2 to 1, limit order, stop up there. And you can forget about the position. Take profit down there. Completely forget about it. You never have to look at it again. If it worked out, you will have gotten paid. If it didn't, you will have been stopped out. It's that simple. Boom, boom. It's very easy to be a trader, man. In this time with the technology we have, it's insane. You don't have to call a broker anymore and tell them where you want entry. Nope. You do it with the click of a mouse. It's fantastic. It's a great time to be alive. I hate the politics, but everything else is fantastic. We'll not talk about politics, though. I don't want to lose half of my subscribers. Yeah, confluence of direction of the trend, direction of the day, off the open and get that expansion does great. Win rate. Yes, it does. So, but I don't know why I have so many different lists, but I watch my Forex, right? That's got every pair in it. Even the ones I don't trade. Like, I don't trade these down here. I don't trade the Hungarian forint. I will occasionally trade the Chinese yuan, but like a lot of these I don't trade. But yeah, I simply look at these numbers right here. I want to see what percent change is happening on the day. Percent change is the most important info for any trader. How far are you off of the open? How far are you down from the open? Right? If you're at the high of the day, like if you're at 0.5% in FX, that's pretty much the top. Or if you're down 0.5%, that's pretty much the low. You know what I mean? But if you're only up like 0.01% or 0.05%, then there's a potential entry there. So I will go look at that chart and see if there's any technical levels, Heath levels, or anything that looks attractive to me, and I'll know within seconds of looking at the chart if I want to take the entry or not. Within seconds. That's why, I'm not as active as people think, not in FX. I'm looking for about 2 to 3 trades per week. If it's a really great week, you might get 4 or 5 in, but most of the time, 2 to 3. Sometimes none. That's just the way it works. That's just the way it works. Let's see here. Let's go see if there's anything in the KuCoin to trade today. See, in crypto, it's a little bit different, right? Look at this thing. It's up 7% on the day. Am I looking to buy something that's up 7% on the day? Hell no. Right? No effing way. Let's find something that's close. Now, with crypto, though, you can get hurt. Like, here's one, Aave. Real close to being at the open, right? 0.12%. So we'll go in here. We'll delete all the lines. We'll find our open. 1900 hours. So there is our open. All right. So I can pretty much look at this. Wait a minute. That's not the open. What the hell? That's not an hourly chart. That's an 8-hour chart. Sorry. Give me 1 second. I'll be right with you momentarily. This is the chart I need. All right. We want 1900. There we are. There's the open. Okay, so this is a beautiful, beautiful example of what the heck I'm talking about right here. Perfect example. So we know we have hourly res there. I don't need to go out necessarily and look at my dailies, right? But it does help. You can mark a daily Heath level there. Okay, perfect. Daily opens there. So last 3 days, you're kind of bearish, right? Last 3 days looks bearish. So this is probably going to be looking like a pretty good spot to get short. Or we can look for resistance. We're at resistance right now. We know that just by looking at the hourly chart, right? Resistance, you're just above it. So you did get a break above resistance. All right. So there's your break above resistance. So do we want to short this or not, right? What do you think? Do we want to take a short here? We are at a pretty decent level. We know for a fact that there's 8-hour resistance right where we are, right? We know there's a Heath level all the way up there. Here's our daily low right there. Boop. So do we want to take an entry here targeting low of day? Well, look how it came off the lows. It came off the lows pretty quickly. You got an hourly rejection right there. So taking entry here would have been particularly what I wanted to see, right? There's your hourly Heath level. So this is my rejection candle. So now I'm seeing exactly what I want to see. I'm right at the open and I'm seeing rejection there. So I'm looking to take an entry at 180 spot 487. But if you take the entry as soon as the level gets touched, chances are you got stopped out already, right? Already stopped out. So far, this doesn't look good. But if we get another wick or a stronger push and maybe take out this swing high, if this candle comes all the way back down, not this candle, but like maybe your next candle or your next candle, if they're back down below 180, 487, then I might take a swing on it, right? Then I might try to take a short on it. Right now, I'm not trying to short something that's steamrolling everybody. But that's basically how I go about my day every day. I just do that and then go look for a potential trade, an entry. I don't see one just yet on Aave. So I would leave this one alone. Because if you get an hourly close above this resistance, then your day is going from red to green. And you don't want to try to short a red to green move because the momentum is bullish right now. But if we take out these stops and then we reject and we close an hourly back below 180, 487, yeah, you could absolutely take a bearish entry and throw your stop above whatever wick high is up there, and then look for at least a 1.5 to 2 to 1 risk to reward. And that would look like this. We will take this entry. Let's just, for pretend sake, say that the wick just barely takes out that high. This high is the one I'm looking at. Let's say it just barely takes that out, and then we get an hourly close back down there. So I'm taking entry. 2 to 1 risk to reward is there. So that's where I'm looking to take profits. But in this scenario, I might look to take profits a little quicker. I wouldn't take profits at this support because it's at that point you're not even at a 1-to-1. Let's see, is it a 1-to-1? No, you're less than a 1-to-1. So that doesn't give it a good trade. It doesn't give us a good risk to reward. And I don't want to try to put my target down here just in some random area. So I probably would not take this trade. If there was a bearish candle close down here, that would give me a target. That would give me something to aim at, aiming at support. But there's nothing for me to aim at here. So no, this will be a scratch, right? But we can look for other ones. ADA. ADA is bullish on the day. Here we go. You're taking out resistance levels. You're making higher highs and higher lows on the close. This was a nice rejection, but you're right back up into resistance. There's resistance. Daily open is there. All right. So this is a doji on the day. I don't even have to look at the daily chart. I can look at this and see that today is a doji. All right, let's go look at the daily. Well, not quite a doji, but almost, right? It's a very small range day in comparison to yesterday's range, right? Very small. Very small. Choppy, choppy, choppy. We don't like this. But if I'm looking for entries on this one, I would have to lean more bullish than bearish, and I don't see it. So the reason I don't want to take a short on it is because we took out resistance with a close to the upside, then we came back in. This is a fake out. This is a bear trap right there. And look where you are again. You're taking out your high on your bullish candle. You take out that high, this right here, these two candles, that is your bear trap. So I don't want to short anything that's already shown me the propensity to trade higher. This was a trap. People fell for it. I'm not trading that. I'm not looking to go short. If I go long, where am I looking for entries? Well, let's delete that. Let's get back on crosshairs. I always forget to do that. So that's a previous daily high. It's not our daily high. Our daily high is right there. So price is almost at the high of day. So I would need a pullback, right? There was the pullback. So that was your potential entry. That wick right there. So what I mean is, this is a trap, but you wouldn't have known it was a trap. So chances are you wouldn't have entered that. But if you did, right, that's what you're looking for. That's your daily open. You're back above it. You closed back above it. So on the wick low push into the open, there's your entry. There's your target. Stop could be super tight on that too. Super tight. I'm talking like tight. Because look at that. I mean, it's flawless. It tested today's open and boom, shakalaka. That's your entry. That's what we're looking for here at Trade Talk. That's our trade. We could have put that stop like that. Turn that into a 10-to-1 risk to reward. That's a huge position. And you are smoking it to the upside. That's the trade. It's too late. We missed it, but there it is, right in the face. That's what we do every single day. That's how we operate in the markets. Fantastic stuff. I don't see anything else. AXS, that's somebody's favorite. 88, that's what we're... Let's see. Atom. Let's go look at Atom. Same thing. Let's stretch it out a little bit just so we can see the previous 3 days. I want to see what the previous 3 days is doing, because that's telling me also what order flow is doing. Order flow in this particular case looks a little bit more bearish than bullish, but we're looking for today's range. There's the open of the day. Same thing here. Got a high, got a low. Now you're in the middle of the range, right? But, we need to wait on this hourly close and see how this hourly reacts. If this hourly pushes up and then closes back below, well, you've already taken out the entire range of this bearish candle. So that's showing you more strength than weakness. You would wanted to see a rejection at that Heath level, that hourly candle right there for your short. If you're looking for low a day, you would wanted to see a rejection there. And you still might. You still might. You did take out that whole bearish candle's range. But you still might close below that. If you close below that, you can take an entry potentially. Put your stop above this wick high or wherever this thing ends up closing. Target your low a day down there. Tight entry, 2-to-1 to the downside. If you're looking for the bullish trade, it's late in the day. It's 12 o'clock. So, I mean, but in crypto, I don't think that really matters what time of day it is. I really don't. Not yet. I haven't seen enough data to show me any different. Through the week, you will see volume explosions around the New York Open, but on the weekend, it doesn't matter. So if you close above, right? If you close this hourly candle above, you can potentially take the bullish trade right there. All right, that's your target. This is our target right here. Now, I can't take... Oh, what am I doing? I can't take the trade because I closed down the platform. Target. Okay. Well, I mean, I could just... Let's see here. All right. Oh, I'm in a position. So basically what I did with this account, if you guys don't know, is I dropped it down to $1,000. I was going to see if I could grow it. And when I do, I'm going to show all the positions with the account history on all the trades that I've taken, right? Once the account's doubled. And I'm not using leverage. I'm adding how many shares I'm trading stocks. I'm not using any leverage at all. If I got $1,000 in the account, I'm only buying $1,000 worth of shares, or I'm only shorting $1,000 worth of shares. Because the reason I'm doing this is because I'm trying to figure out a way to get people around the PDT rule in day trading for the small penny caps. If you open a TD Ameritrade account as a cash account, then you get away from the 3 trades per week deal, the PDT rule. Right? The PDT rule means you got to have $25,000 in a check or into your trading account, and then you can take as many entries and exits that you want. If you're under 25K, you can only take 3 day trades per week. But if you open a cash account, you don't get to use margin. You can only trade with what money you have, and it's been slow growing, right? I'm only up $78 on the account, and look how many trades I've taken. It's been slow, so yeah. My bad. But anyways, I don't want to mess it up, take this trade, but if you close above here on Atom USDT, if you close above, then watch your old Heath level down there at 24.37 and 24.39 for a potential wick down to that, and then you want to see that area hold. on a situation like that, you can go all the way down to a 5-minute chart. And you do not want to see a 5-minute close below. If you do get a 5-minute close below, you want to see it immediately bounce back out of there. If it does not, then you do not have a bullish position here. There is no entry for that target. And that's a pretty good piece away, right? That's a pretty good piece. That's today's high. Let me look at the daily. You have another daily high over here also. That could potentially be a target as well. Daily res, right there. Your target is under daily res. Beautiful. So that's a potential entry. And you're taking profits even before the daily resistance. So yeah, just watch it, right? Watch it, how this closes. Just 37 minutes, so you got to be patient. And then you can potentially look for bullish entries if every price trades back into the open or that old supply zone. The reason is because sometimes these supply zones, your Heath levels, that when it worked that time, right? But then price traded lower and did a up psych and went right back up. So now, since you're above that, look to see if that area holds as support. Either one of these two areas. And then that's your target on the day. And then that's pretty much it. But that's what we do every single day. This one is at 0%. This one is at the open. I don't want to get too... Yeah, you're at the open on Dent USDT. Dent USDT looks bad. It looks weak. On this one, I'd probably be more prone to look for shorts. Just because it looks weak. Looks pretty bad. I mean, it's been trading absolutely sideways. So yeah, I mean, there's an hourly Heath level there. And you did get one test of it. So maybe you could take a quick scout back down, just looking for a very small push back down to the open. If this gets above, right? If this trades up, gets a big pop, comes into this, you might be able to take a quick scalp short, targeting the open of the day. Take profits there. That to that, that to that. That's it. That's all you're looking for. That's it. Let me see here if I got any new questions. 88 bear flag. Doing something as Bitcoin probably sideways. Yes. Yeah, they all are. They all are. You pulled up Algo ADA. You didn't check. What? Algo's up it's up 1% on the day. We did check that. ADA. ADA's up. It's up off the highs pretty good. Or I mean off the open pretty good. There's your open on the ADA. So I mean it's gonna be the same thing. Look where this candle closes at. What is going on? Oh, my baby putting in her lunch order. Like I'm some kind of... What do you think this is? Uber Eats? I'm kidding. Of course, after the stream, I'll go pick her up a sandwich. All right. So, yeah. This one looks bad, but the order flow is bullish, right? It looks pretty... This one's actually moving. It's range bound, but it's got some pretty good moves in there. I don't know, Les. I don't know about this one, man. There's the 8-hour Heath level there. I mean, if I did short it, I would only be looking for that support, that 8-hour support. That's it. Like, that would be my target. If it rejects there. But that's 8-hour. That's 6 hours left on that. This one I'd probably just step away from. A beautiful 4-hour Heath level right there you're trading into. So you've already traded into it once and rejected. Now that you took out this candle's low and this candle's high, you have a bullish engulfing on the 4-hour. So I wouldn't try to short this. See this? You took out... This is your check of the Heath level. So if you did take an entry on the 4-hour... And this would have been your target, that wick low. Notice how you stopped short of the target. Then on this open, you traded a little bit lower, and then boom shakalaka. This is a na boo boo. I lied. I'm going higher type of thing. I would not be looking to short it. And I just don't see nothing there for bullish entries because you got so much resistance. There's potentially 3 areas of resistance there. Hourly Heath level here. This is going to be old support, so that could be potential resistance. This could be potential resistance, and then obviously the close. So you got 3 big zones of resistance there. So if you get an hourly close above the daily open, maybe look for a pullback and then potentially target just that first support zone or first potential resistance at 137. It all depends on how this candle closes, right? But I don't know. Any thoughts on gold? Yeah, let's go look at gold. I always do that. I always just type in the word gold. I know I can. I know it works, but I like the XAU USD chart better. It's struggling. Man, it's trading everything is sideways. Like everything. Nothing is trending, really. Stuff's either starting to turn around, starting a reversal at the lows, or sideways as crap. Garbage. So we had this trend line down here. We were looking for that to hold for potential bullishness on this because of inflation risks. Gold usually does get a bounce because people they'll take their money out of risky assets like the S&P and start moving it into gold. But we're not seeing that. We're not seeing that. Right? We saw it over here, but now it's right back down. So it's like, what the F is going on? Well, we know it's at support, that old daily demand zone right there. It's still holding. You did not get a daily close below it. So until you do, that is support. That is support. And now you have an actual daily close above it. So now that's support too. So you have like a pretty good zone of support down in here. Got a big push lower, took out this day's low and that day's low, and then you got a bullish bounce on Friday. So just with that info there, knowing that on Friday we did look like we were going to have bearish continuation, we took out that daily low and that daily low. So those 2 targets were taken out, and there was bids sitting down here. Lots of bids. So the short sellers taking profits at those targets, and then on top of that, all the people that are looking to buy after that, you got a big, strong bullish pop, and you closed almost into resistance. So what I would watch for on gold is I would watch for a pullback down to this daily support right there. Might not happen today or tomorrow, but anytime this week, if gold pulls back down into 1775 spot 30, that would be a potential spot to start to look for an entry. That's where I would start to look for an entry. Doesn't mean I will take an entry there. I will go down to a smaller time frame and watch to see if you're getting hourly closes below that or whatnot. But that's where you're potentially looking for your entry on gold. Bullish entry, not a bearish entry. Bullish entry. If you get below that and you close a 4 hour below it, the next 4 hour candle needs to be a bullish engulfing to stay bullish. If you don't get that bullish engulfing, if you get another bearish 4 hour close, scrap it. You're not looking to take the long because something else is different. Something has changed. Right? But I like a long on gold next week. I do. Don't know if it works out, but I like it. $78 with no margin on 1,000 is still up 7. Fantastic. Yeah, it is. It's not bad. It's not doing bad. One position I got to close. I meant to close it Friday, but it's not real money, so I forgot about it. I forgot about it, to be honest. Nothing worked out hardly last week. I caught a couple nice trades on some stuff, but I think I already got it off my watch list. So yeah, there's no stocks here. So all I could do is I can go back into this position and show you what I was looking at. Oracle was up over 100% on the day. See here? And I posted that in the chat. right? I posted that in the Discord. I said Oracle's up 100%. Look at that gap. That's a massive gap. So what I was looking for intraday is a move to the downside. And then this is what I did. Right here. I got short on this push up into this Heath level, but I was looking at something else or answering a question or something. So my I had a limit sell setting there, and you won't be able to short. I don't think you can short stocks on $1,000 account. So I shouldn't have even taken this entry. It was just, man, you know what I'm saying? I wanted to take it. It's $105 stock. So, and I bought 30. I sold 30. So this time I did do more than $1,000 worth. So yeah, I don't even know what I was thinking there. But anyways, I was looking to take the entry on this retest of that and looking for this target. I didn't even take profits. I just completely forgot about the entire position. Completely forgot about it. So I'm surprised I didn't get stopped out. And that risk is probably terrible. Not too bad. $26 risk on $1,000 account. That's not too bad. It's not 1%, but it's $10 is 1%. So it's a 2.5% risk. It's not too bad. But that's totally, I wonder if they'll let me close it. Off trading session. You're screwed. It'll close as soon as the market opens tomorrow. All right, guys, we're going a little long here, an hour and 30 minutes. Lunch order dropping frames. Yeah, she wants me to bring her something to eat. I can see a Head and Shoulders fail. Needs to form next shoulder, hashtag gold. Let's go back to gold. I didn't see a Head and Shoulders, but I'm typically not looking for them either. I was only on the daily, so you had to see it on the daily. Oh, I see. I think I see. If you're talking about this, and then this. Yeah, neckline is there. Neckline is there. So, yeah, if you get a break down in gold, you have a potential measured move even. A big move lower. Big move lower. Because that's generally how these patterns work out. I don't know if that's what you're talking about. Maybe you're talking about this and this. I don't know. I'm not a pattern trader. So I wouldn't even know how to approach that. I see a Head and Shoulders here and a right shoulder potentially here. If that's what you're looking for, move down. And if so, a measured move is damn near $100. So that'll put you almost in the 1600. That'll put you right at looking at this as your target. Right? That would be your bearish target if this Head and Shoulders does indeed happen. That's why I was saying looking for gold, a bullish entry on gold just because of the near-term order flow. 1775.31. Right there. That's your spot. If you start closing 4-hour candles below that, then you're not looking for an entry, because then this bigger term Head and Shoulders, whatever, it could be playing out. But I don't really see a bullish Head and Shoulders here. I guess a sideways one. So something like this. That would be like your neckline, if that is what you're talking about. Get off. So if you tilt your head to the side a little bit, you can see left shoulder, head, right shoulder, neckline. Let's get rid of that and put this one over here, because then we can just boop, something like that. So if you want to buy a breakout of an inverse sideways Head and Shoulders, you could potentially look for that, target that wick right there. But you got to get above this on at least a 4-hour closing basis. I'd say if you get a 4-hour close above that 4-hour resistance right there, you'd be pretty close to. I mean, that's not a guaranteed. I guess we could do it like that. And then bring this one up. We're only using the closes like that. Right? And then a measured move from this. Where is it at? This one. Let's see here. I got to get away from price of the magnets. About midways of that trend line. And that's your measured move on gold if you do indeed get the breakout. So like I said, I mean, either way, that's your target, all right? So you have a potential measure move on gold if you get a 4-hour close above that green trend line, and you're targeting 1815. Potentially. I'm not a pattern trader, but that's how it would work if I was. All right, guys. Gotcha. Not inverse. Gotcha. You're looking at the bigger head, the bigger one. Boom, boom. That's a big move. And like I said, measured move puts you roughly around this target. Big move. Let's just do this. Just do a rough estimate there. There's your neckline. That's your potential measured move. There's your target. So almost perfect. You almost have a perfect potential move on a breakdown of a head and shoulders neckline, targeting 1677, that wick low. But for a day trade, I would be looking for that bullish entry right around that bearish close for potential bullish entries. I could be wrong, so manage risk, all that good stuff. All right, guys, you have a fantastic day. If you have any questions, as always, drop them in the comments section. Most of you guys are in the Discord. I'll be around all day. So if you have anything to say, just say it. I always answer you guys, especially. Thank you so much for your continued support. I really appreciate it. You guys have the fantastic rest of your day, and we will see you Tuesday morning. I guess I could try to go live for the Forex Weekly Outlook if the internet will allow it. If it won't, I won't. But we'll see how it goes. I don't have nothing planned for today. So I will talk to you guys later. Make sure you trade safe, trade smart, and as always, happy trading, everybody.